Okay, so this is another video for the subject capital markets, and in this particular video, ang topic natin, functions of the money market saka yung mga money market instruments natin. Okay, so we have here an article from corporatefinanceinstitute.com. Okay, ang main point talaga dito dapat yung money market instruments, pero since may available information here on the functions, sama na natin. Okay. Money market contributes to the economic stability and development of a country by providing short-term liquidity to governments, commercial banks, and other large organizations. Although issuer din ng security instruments itong mga to, they are also investors into those types of financial securities or financial instruments. Investors with excess money that they do not need can invest it in the money market and earn interest. Although since short-term, usually yung financial instruments being traded in the money market, so yung interest is expectedly low then. Okay? Here are the main functions of the money market. So we have financing trade. So the money market provides financing to local and international traders who are in urgent need of short-term funds. So, madaling, if you are holding on to these types of investments kasi, edi mas madali mo rin silang ibebenta when you suddenly needed money. Okay? It provides a facility to discount bills of exchange, and this provides immediate financing to pay for goods and services. International traders benefit from the acceptance houses and discount markets. The money market also makes funds available for other units of the economy such as agriculture and small-scale industries. Okay? So for businesses na meron namang nag-i-issue ng mga ganitong securities or businesses who can issue this type of security, then they can raise small capital lang for immediate need lang naman nila. Okay? So, ayun, financing trade kasi yung proceeds from the sale of these types of securities pwedeng gamitin in their operations. Central bank policies. The central bank is responsible for guiding the monetary policy of a country and taking measures to ensure a healthy financial system. Through the money market, the central bank can perform its policy-making function efficiently. Okay, kasi, again, involved is financial instruments and then convertible into cash. So, in a way, dahil ito yung nare-regulate din ng central bank, then implementation ng policies nila, it does help or it does contribute. Okay? For example, the short-term interest rates in the money market represent the prevailing conditions in the banking industry and can guide the central bank in developing an appropriate interest rate policy. So, source of data and information din. Also, the integrated money markets help the central bank to influence the sub-markets and implement its monetary policy objectives. Ayan. So, related na yung mga yan. In a way, money market, financial markets, syempre part pa rin sila ng financial system. So, they are under pa rin ng regulation ng central bank and would really affect the implemented monetary policy. Okay? Growth of industries, so yun na nga, since nakapag-provide siya ng source of short-term funding, so it does contribute in the growth of industries. Kasi yung perang magiging proceeds from the sale of money market instruments, so pwedeng gamitin sa operations ng businesses. Easy avenue where businesses can obtain short-term loans to finance their working capital needs. Due to the large volume of transactions, businesses may experience cash shortages. Meron namang silang sale, merong receivable from customers, pero yun nga, hindi pa agad-agad na ko-collect din from the customers. So, sometimes nakaka-experience sila ng cash shortages. Okay? Tapos, they would have to pay their suppliers when they buy raw materials or their employees or meeting other short-term expenses. Through commercial paper and finance bills, they can easily borrow money on a short-term basis. Okay? Although money markets do not provide long-term loans, it influences the capital market and can also help businesses obtain long-term financing. So in a way, di ba, if you notice, palaging magkakambal itong money market saka yung capital market. Kasi short-term, money market, long-term, you have capital market. The capital market benchmarks its interest rates based on the prevailing interest rate in the money market then. Commercial bank self-sufficiency. The money market provides commercial banks with a ready market where they can invest their excess reserves and earn interest while maintaining liquidity. Commercial banks or any other types of banks for that matter, diba, they have reserve requirements being imposed by the central bank. So they have to ensure that they have sufficient cash on their vaults or on hand para dun sa mga withdrawal needs ng kanilang mga customers. So, merong portion ng kanilang funds na pwede nilang i-invest in long-term investments, but majority of, siguro a large portion din, they tend to invest in short-term investments para madali rin yung convertibility into cash in case they suddenly needed, cash or funds for their customers. Also, when faced with liquidity problems, they can borrow from the money market on a short-term basis as an alternative to borrowing from the central bank. Okay, the advantage of this is that the money market may charge lower interest rates on short-term loans than the central bank typically does. Okay? Tapos, ito na, yung pinaka main content talaga dito, types of instruments traded in the money market. So, ano-ano nga ba sila? So, first, we have Treasury Bills, considered the safest instrument since ang nag-i-issue nito ay government. So, here in the Philippines, we also have Treasury Bills issued by the Republic of the Philippines, the government. Tapos, since backed nga by government resources naman, normally ang maturity, 1, 3, 6, or 12 months, but there are longer maturity periods. Tapos yung interest rates niya, siguro nag-average ng at 4% annual interest rate. Mababa talaga kasi low risk naman yung investment na to. Treasury bills are sold at a discount to their face value, and the difference between the discounted purchase price and face value represent the interest rate. They are purchased by banks, broker-dealers, individual investors, pension funds, insurance companies, and other large institutions. Pero normally, financial institutions talaga yung unang bumibili, kumbaga. Tapos, yung mga individuals would also like to invest. Normally, they go through the financial institutions. Secondly, we have certificate of deposit issued directly by a commercial bank, but it can be purchased through brokerage firms. It comes with maturity date ranging from 3 months to 5 years and can be issued in any denomination. Depende sa pangangailangan. Most CDs offer a fixed maturity date and interest rate. They attract a penalty for withdrawing prior to the time of maturity. Just like a bank's checking account, a certificate of deposit is insured by the FDIC. Okay, not sure if we do have certificates of deposits here in the Philippines, but I think we do, especially if it's being used for business transactions. Ayan. Next, we have commercial paper and secured loan issued by large institutions or corporations to finance short-term cash flow needs, such as inventory and accounts payable. Okay. Wait lang. Balik tayo dito. Nabanggit ko kasi na merong more than 1 year na treasury bills, but since these are instruments in the money market, so normally, yung mga short term. Okay. And then yung longer terms, edi sa capital market, tinitrade. Tapos kapag malapit na yung maturity, saka sila tinitrade ay sa money market. Okay. Commercial paper, balik tayo, ayan. Unsecured loan, tapos for short-term cash flow needs such as inventory or accounts payable payments. It is issued at a discount with the difference between the price and face value being the profit to the investor. Normally, ang nakaka-avail lang nito yung mga institutions with high credit rating. Okay, tapos considered a safe investment kasi kumbaga reputation nila tested na rin naman sa credit worthy sila. Okay, meron silang good history of repaying their debts. Commercial paper is issued in denominations of $100,000 and above. Individual investors can invest in the commercial paper market indirectly through money market funds. Okay? So, indirect investment kapag individual investors. Comes with a maturity date between 1 month and 9 months. And then we have bankers' acceptance, form of short-term debt that is issued by a firm but guaranteed by a bank. It is created by a drawer, providing the bearer the rights to the money indicated on its face value at a specified date. Kumbaga parang sin-certify ng bank na merong deposited money etong firm or yung business with them. Okay, tapos if it's being used for international trade, so yun, pwede siyang maging basis for the transaction to go through. Okay, parang proof na may pera or may pambayad itong ka-transaction in an international transaction. The holder of the acceptance may decide to sell it on a secondary market, and investors can profit from the short-term investment kasi normally discounted or at a lower price compared to the face value ang bentahan. The maturity date usually lies between 1 month and 6 months from the issuing date. Okay? Tapos lastly, they have ito, repurchase agreement, short-term form of borrowing that involves selling a security with an agreement to repurchase it at a higher price at a later date. Okay? So, kumbaga, merong collateral naman or security na tawag dito, na binibigay. So, parang may binenta ka na investment din. Pero, meron kayong agreement na at a later date is bibilhin mo rin siya agad pabalik at a higher price kasi yun yung magsisilbing profit nung buyer. Okay? Commonly used by dealers in government securities who sell Treasury Bills to a lender and agree to repurchase them at an agreed price at a later date. Maturity ranges from overnight to 30 days or more. Okay? Tapos here we have other types of money markets. So, nabanggit na natin kanina yung commercial paper. Federal funds, Treasury Bills. Okay? This refer to Treasury Bills. Tapos, a bank without enough cash on hand to meet the requirement will borrow from other banks. Federal funds rates if the interest banks charge each other to borrow Fed funds. So, the current Fed funds rate dictates all other short-term interest rates. Tapos, currently daw, current events. Federal Reserve lowered the reserve requirement to 0 on March 26, 2020 due to the global health crisis. But I'm not sure. 2021 naman na ngayon. So, probably they upped this up. They upped this already. Okay? Discount window. If a bank can't borrow Fed funds from another bank, so they go to the central bank and then kumbaga parang, assistance na instead of charging the prevailing interest rate, they are being charged with a lower rate or yung tinatawag na discounted rate. Kasi nga, they're already having financial trouble. So, central bank as a form of support, they lend to these banks at a lower rate. Pero in cases lang naman siya ng financial trouble saka in emergencies. Kasi nga, ang central bank, they act as lender of last resort. Okay? And then certificates of deposit, nabanggit na rin natin kanina. Euro dollars, banks also issue CDs in foreign banks naman. Okay? Kumbaga parang CDs din siya pero in foreign banks, held in euros instead of US dollars. Repurchase agreements, bankers' acceptance, tapos we have swaps, contract between two parties to exchange all future interest rate payments from a loan. So, they are a type of derivative. Yung example natin kanina, Company A, bibili ng machinery from a foreign company. Tapos, the payment is in US dollars instead of pesos. So, yeah. There are different types of contract na pwedeng gawin doon. Pwedeng futures, pwedeng forward contract, tapos another itong swap. Okay? If they're going to, di ba yung may foreign exchange, but if company A is going to borrow money from a financial institution, tapos they would agree on a future interest payment on the loan, edi swap na siya ngayon. Okay? But that would be between company A and the financial institution na mag-agree siya on the swap. Okay? And then bukod pa yung magiging contract niya with regards to the foreign exchange naman. Okay? They are a type of derivative. The value of the swap is derived from the underlying value of the two streams of interest payments. Swaps allow banks to act as middlemen for companies that want to protect themselves from changes in interest rates. Okay? Swaps are like exchanging the value of the bonds without going through the legalities of buying and selling actual bonds. Most swaps are based on bonds that have adjustable rate interest payments that change over time. Swaps allow investors to offset the risk of changes in future interest rates. So parang siya, insurance na depende, para makikipag-gamble ka. Kapag expectation mo is tataas yung interest rates, kumbaga, beneficial sa'yo yun. Pero kapag bumaba yung interest rate, yun yung betting, yung sa kabilang side, edi benefit for the other side naman. So, parang gambling, Pero in a way, kumbaga, parang, yun kasi yung expectation mo, yun yung project mo. So, if that happens naman, edi ikaw yung magbe-benefit. Kung tama, yung projection mo, ikaw yung magbe-benefit. Pero kung mali, yung projection mo, edi loss mo, So, parang ganun siya. In a way, mix siya ng gambling and insurance, Backup line of credit. Backup line of credit is a short-term note that protects the investors in a company. Here, a bank will guarantee to pay 50 to 100% of the money market instrument if the issuer defaults. So, parang CDO, credit default option. Parang ganun. Credit enhancement. Bank issues a letter of credit that it will redeem the money market instrument if the issuer does not. Okay, so parang ganun din. Parang insurance itong dalawa. Treasury bills, municipal notes, wala tayo dito sa Pilipinas. Treasury bills pa lang. Shares in money market instruments, so you have your future contracts, future options. Itong future contracts obligate traders to either buy or sell a money market security at an agreed upon price on a certain date in the future. Kaya siya tinawag na futures contract. Ngayon pa lang nag-usap na kayo, nag-agree na kayo na bibilhin yung isang security or isang bagay. And then you have, for instruments are typically used, treasury bills, interest swaps, Eurodollars, and 30-day average of Fed funds rate. Tapos you have futures options naman. Traders can also buy just the option without an obligation to buy or sell a money market futures contract at an agreed upon price on or before a specified date. Pag sinabing option, hindi siya, kumbaga may option yung seller na i-utilize yung option. Kung favorable sa kanya, edi go ahead. If not naman, edi wag na lang. Okay? Kaya siya option. And unlike dito sa contract na contract talaga siya, it will happen. Okay? Ayan, tapos meron siyang little bit here about the role of money market instruments in the financial crisis, especially sa 2008 financial crisis. So you can just read this on your own sweet time. Nakalink naman sa description yung mga articles. So that's it for this one. Thanks and bye.